Hey, what's up everyone? My name is Lawrence and welcome to my channel, where I teach you how to become a day trader through tips, resources, and best of all, insight on my journey to becoming a profitable day trader. In this video, I'll be talking about candlestick patterns. So candlestick patterns are one of the most important parts of technical analysis along with volume. And they're important because they help give you an edge of what direction the market will be going in real time. And you can use this information to make money really in any market. And that's if it's stocks, crypto, Forex, or whatever. And in my other videos, I talk about how price and volume are the most important indicators as a day trader. So learning candlestick patterns are essential. All right, so let's check out a few patterns. Now, to the right is a breakdown of a bullish and bearish candlestick. If by chance you don't know how to read a candlestick, check out my last video called Candlestick Simplified. It'll break everything down to you in a simplified way. And once you grasp it, this video will make a lot more sense. Now, before we start, to make sure that we're on the same page, I'm going to go over a few key points. Okay, so the size of the candle matters a lot. The bigger the body, the stronger the trend. The more momentum and volume we have going in that direction, and also the more likely the next candle will continue in that direction. As the body gets small, the trend is running out of gas, the momentum slows down, and more likely we're approaching a reversal. So then we have wicks and shadows. These are interchangeable terms. They mean the same thing. And they're just as important, if not more important than the bodies. So the longer the lower wick of the body is, the more buying pressure there is. There are buyers down there that's pushing the price back up. Now, the longer the upper wick is, the more selling pressure there is. So as the price goes up and goes up, there's sellers that's selling the stock and pushing the price right back down. Now, we know that trading is a reactive skill and the market tells us the direction first. We confirm it by reading what the candlesticks are telling us, and then we hop in the trade, right? So let's start with neutral candlestick patterns. Neutral candlesticks signify indecision. The market isn't buyer heavy or seller heavy. Since this is a reactive game, we have to wait until the next candles tell us what direction we're headed. So then we have the doji candle, which is a cross-shaped candle where the open price and the closed price are the same. In other words, completely neutral. If the open price was higher than the closed price, it would be a bearish candle, meaning the price has gone down. And if the closed price is higher than the open price, it will be a bullish candle, meaning the price has gone up. But when the open and closed prices are the same, it creates a doji, which shows no movement in price, making it neutral. Then we have the spinning top, a bullish and bearish candle with the exact same value. Opposing candles with the same value cancel each other out, neutralizing the price movement, kind of making it identical to a doji candle. So if you want to put it in basic math terms, 4 minus 4 cancels each other out, which is why the answer will always be 0, or 2 minus 2 equals 0. So whenever you see these neutral candlesticks, think of it as the market being indecisive or confused. And us as traders, we follow the market leads the way. So if the market doesn't know which direction to take, neither do we. So we have to be patient and wait for the next move, because it could either be a continuation or a reversal. It's completely unpredictable, so it's best that we don't guess, but rather wait for confirmation. All right, so moving on to the bullish candlestick patterns. First up, we have the hammer. So we have a downtrend starting us out, right? So you can see that there's a long lower wick, which, like I said, signifies a lot of buying pressure. So we have a downtrend. The third candle actually went down and reached lower lows, like it went even for a continuation, right? So at that point, buyers stepped in, found that low price was very attractive for that stock. They bought it up and pushed the price all the way up, forming a green hammer or a bullish hammer, leaving that long lower wick. Like I said, identifying buying pressure. You can see that it's a clean reversal back to the upside. Next up, we have the inverted hammer. We started out with a downtrend again, right? And you can see that the third candle, that inverted hammer, it didn't reach newer lows. There was no continuation. It completely reversed, went to the upside. The sellers wanted to push and fight back down to reach new lower lows, but they end up failing. So buyers maintained a bullish candle for the close, and then you can see that there is a reversal to the upside. Then we have the Dragonfly Doji, which starts us out with a downtrend again. We actually reached lower lows. So there was a continuation to go even lower. But I guess that was an area where buyers felt like that stock price was very attractive. They bought it up from there, and then the open and the close end up being the same. Now, the reason why this isn't considered a neutral candlestick pattern is because the buyers have the upper hand because of the lower wick. There is no upper wick. So the buyers, like I said, the buyers have the upper hand. And as you can see, the next two candles are bullish candles reversing back to the upside. Next up, we have the bullish engulfing. We start off with a downtrend. And this is what I was talking about before with the size of the candles. So you can see that the first candle is pretty big. It's a decent sized candle, a bearish candle. The second one is drastically smaller. And then the third one is very small. It's minuscule. So then you see that the fourth candle, the first bullish candle, completely engulfs the previous bullish candle. So that shows a lot of momentum. The candle size, the bullish candle is pretty big. So that shows a lot of volume, a lot of momentum, reversing us back to the upside. Then we have the piercing line. We started off with a downtrend, and this is actually a very dramatic change in trend. So as you can see, that third bullish candle is that third bearish candle is a pretty decent sized candle. And then we automatically have a bullish candle, a pretty decent sized bullish candle right next to it, signifying a reversal back to the upside. So there's really no reason, by the way, for the piercing line, there's really no reason that I could possibly give you as to why that was such a dramatic change. Maybe there's a catalyst, like a news report, like some good news on a company, or maybe, buyers just stepped in, took favoritism over this stock, was like, hey, I just want to buy this. I think this is a good price. And, maybe it just went for a reversal to the upside. Next up, we have the morning star, which you start out as a downtrend. Then we see half of a spinning top, right? So spinning top is only neutral if there is a bullish candlestick and a bearish candlestick of the same value. But since we're missing the bearish part of the spinning top, it doesn't cancel each other out, right? So we see that it reversed the upside because there was no bearish candlestick to make the spinning top become a neutral candlestick. And even if it was, like I said, it's a neutral candlestick. It could have been a continuation to the downside, or it still could have been a reversal to the upside. Next up, we have the morning doji star. We start out in a downtrend, then we hit a doji candle. Like I said, a doji candle is a neutral candlestick. The market is at an indecisive phase. It's confused. We don't know if it's going to have a continuation to the downside or if there's going to be a reversal to the upside. But as you can see, this was a reversal to the upside. Lastly, for the bullish candlestick patterns, we have the three white soldiers. So we start out with a downtrend. Buyers found that price to be attractive. They start buying in slowly and gradually increasing. So you see that first bullish candle is pretty small, right? So we have pretty good momentum starting out. It's okay. Then the second bullish candle starts to get a little bit bigger. There's more momentum. The stock is becoming more in demand, attracting more buyers. Then we got the third candlestick, which is even bigger, and so on and so forth. So moving on to the bearish candlestick patterns. And before we continue, if you just take a step back, you can see that these patterns are literally the same between bullish and bearish, but it's just inversed, right? So, that can help you memorize these patterns. They're literally the same, but it's inversed. That's all. So next up, we have the shooting star. We start out with an uptrend, right? And we see that first bearish candle actually was a continuation to the upside. But at that point, that's where buyers felt like this is a good time to take profits. So they end up selling for profit, right? But there were no buyers. There were no other buyers to maintain the price level. And because there was massive selling, you can see that we hit a reversal for the downside. Next up, we have the hanging man. We start out with an uptrend. We see that the first bearish candle, which is the hanging man, we didn't reach new highs, right? So it was an immediate reversal back low. We see a long lower wick, which indicates a lot of buying pressure. So the bulls tried to push the price back up for a continuation higher, but they end up failing. There wasn't enough buyers, so they end up failing, causing a reversal down, reversal to the downtrend. Sorry. So next up, we have the Gravestone Doji. Started out with an uptrend. There was continuation up, but there was a point where buyers felt like this is a good point to sell, take profits, pushing the price back down, giving us a lot of selling pressure with that long upper wick. And the reason why this isn't a neutral candlestick is because the sellers have an advantage. There is no lower wick. There's only a long upper wick, leading us to a reversal to the downside. Next up, we have the Bearish Engulfing. So we start out with the upside, like I said, the size of the candles. The first two candles are pretty good size. And then you can see that third bullish candle is very small. The first bearish candle completely engulfs the last bullish candle, giving us a lot of momentum, a lot of bearish momentum, a lot of volume, selling volume, causing a reversal to the downside. Then we have the dark cloud cover. We go to the upside. You see we're going up to the upside, and then there's a dramatic change for whatever reason. Same as the piercing line. It could be a catalyst, or it could just be a random act of selling. And we just had a reversal straight to the downside. Then we have the evening star. We start out with an uptrend. We hit a spinning top, a bearish spinning top, but because there is no bullish spinning top, there's nothing to cancel it out. And you can see that there's a reversal to the downside. We have the evening doji. We're going up to an uptrend. We see that there's a doji, a neutral candlestick pattern. So at this point, it could have been a continuation to the upside, or it could have been a reversal to the downside. But as you can see, it was a reversal to the downside. So lastly, we have the three black crows. So we're going up to the upside. Buyers begin to sell into small increments and then start increasing the selling with the absence of more buyers trying to push the price back up. So you can see that it started out with small selling, and as the candles increase, there's more selling pressure and a lot more selling volume as we reverse to the downside. All right, so that pretty much wraps up the video. And I just want to say one more thing. These patterns are just a foundation for us, right? They're very highly probable patterns. Highly probable meaning they're not guaranteed, right? So the stock market has millions and millions of people buying and selling stocks all over the world for justified reasons to absolutely no reason at all. Like there might be a million people that just accidentally hit the sell button or buy button, right? And I'm saying this to let you know that the stock market is not comprehensive. Like you're not going to understand it. You might see, a hanging man pattern going, and then all of a sudden it just reverses back to the upside. Or you might see a bullish hammer, right, form, and then it continues to the downside. Like none of these are guaranteed. Always look for confirmation. Always set a stop loss. These are highly probable candlestick patterns. Like I said, they're just not guaranteed. So take that with you. I hope this video helped. And if it did, don't forget to hit that like button, subscribe to my channel, and hit the bell to be notified when I drop new videos. Y'all be easy.